Hello, everyone, and welcome to today's webinar. I'm just going to give it a few minutes just so everyone can come in, because we do have a lot of people registered. In the meantime, I will send you guys a poll and then we can get started. Okay. So if everyone can put in the chat what business they're in and where they're located, just so we can see where everyone is from.
We have a big attendance today, so looking forward to everybody. We have over 250 registered, so we're going to give it an extra 5 minutes just to make sure we have everybody in who want to attend today. So we will just be waiting and we'll have a look at your poll and see where you are, what you're doing, and we'll try to answer your questions and tailor our presentation to you if possible.
Awesome. We can see a lot of accountants here today. Just want to let you guys know that we will be having an accounting webinar for the end of financial year, so specifically for accounting, but Damin will cover as much as possible today. So it's great to see everyone on board. Healthcare, consultancy, awesome. Just give it a few more minutes. Accountants, yep, we've got a lot of accountants on board.
Well, it's the end of financial year, so I think the accountants and lawyers are working very close with each other at this time of year so that the lawyers can get a little high-level accounting recommendations and the accountants can give a little bit of recommendations from a legal perspective as well. So there's a lot of things that need to be done at this time of year.
Awesome. Yes, we've got some lawyers on as well.
You can start asking questions as well. We have a Q&A tab. We won't be answering any questions in the chat, but if you put your question in the Q&A tab, we will spend a lot of this presentation going through those questions.
Yes, that is correct.
And this is recorded, so if we don't get to your question, you have to leave early, then we will be able to answer your question during the recording.
And we'll send you guys a recording and a copy of the slides at the end. So that is there for you guys to access. Just give it a few more minutes because we have a few people still coming in. A lot of people from around the country, New South Wales, Victoria, Queensland, welcome. Hope everyone isn't too hungry. It's already 12 o'clock. Got some questions coming in already. Awesome. We'll be answering the questions at the end of the webinar, so feel free to just add it and we'll get to it. We've got someone from the Philippines. Welcome. So I'll just answer one now. The accounting presentation going to double up with this one. No, there will be some overlap in terms of one or two topics. However, that will be very focused on accounting. So what you can claim back before the end of financial year. And that's going to be with Pat from Pop Business. Awesome. We'll just give it one more minute and then we'll begin shortly. So for those who just came in, welcome. We're just going to give it until 12:05 and we'll begin the presentation. Very wide range of companies, businesses.
Yeah, so we have a fair amount of accountants in this meeting. We have a couple lawyers in the meeting as well. And then we have general businesses, healthcare, all across the country, Queensland, Victoria, New South Wales primarily. But we do oftentimes have Western Australia and South Australia. So waiting to see whether anyone else comes in. Financial services, mortgage broking.
Okay, awesome.
And in terms of our poll, have we launched that yet?
I think we have, it's just hidden from me at the moment, but I think we'll begin the presentation.
There, we've just started a poll to see what industry you're in, what you're doing, how old your business is, and we'll have a look at that so we can try to tailor our presentation today.
Awesome. So it's 12:05. We'll get started on the presentation. Damin, do you want to go to the next slide, please? All good. So welcome everyone to today's webinar. So we're going to be discussing how you can prepare your business for the end of financial year. So just through the course of the webinar, Damin will be running through some content, but as Damin mentioned at the beginning, if you did have any questions, you can just pop it in the Q&A section and we'll answer those. And I think will be better than adding it to the chat because as you guys can see, a lot of people have commented and we don't want to miss any of your questions. So today's agenda will cover who we are, what Lawpath does, and Damin will introduce himself. We'll go over the top ways you can prepare for the end of financial year, any questions you may have, and we do have a special offer for everyone who has joined the webinar today. Okay, so for those who have come to our previous webinars, you would know a little bit about Lawpath, but for those who are joining us for the first time, I'll just give you a bit of a brief overview. So essentially, the Lawpath platform is your all-in-one business hub where you can access multiple tools to help your business. It's designed to provide you guys with all the tools from the legal side of things. So this includes over 350 legal and business documents. You can sign documents online with our e-signature tool. You can hire a lawyer online through our lawyer marketplace, and Damin is one of our lawyers for a fixed fee, and you can book consultations. We also have on-demand calls with lawyers and accountants to discuss all your legal matters. And you can also register a company, ABN, and business name. So I'll pass it over to Damin to introduce himself and begin the presentation. Thank you.
All right, thank you very much. I assume you've probably seen a presentation by me before, but if not, my name is Damin Murdock. I've been a practicing solicitor for more than 13 years. I've run my own law firm for many of those years. I've been admitted in Queensland, Victoria, and New South Wales. And I've been acting for a lot of tech companies, a lot of general commercial law businesses, and thousands and thousands of startups. And I guess it ranges in sizes. I've acted for some of the largest companies in the country. I've also acted in some very large litigation matters in all the different courts across the seaboard as well. So the first thing we want to do is, the end of financial year is really about a time of reflection. It's a time of looking back. It's a time of looking forward. And you really want to take an opportunity to see what your pay points are, what your issues you have had in the past, and what kind of risks you might have. And what's really important is to look now and know what these things exist now on this side of the year, but then also looking at what you need to do on the next side of the year. So from an accounting perspective, it's really about what you need to do immediately prior to the 30th of June. You either want to spend more money to increase your expenses, or you want to slow down your invoicing to reduce your profit potentially. And that really depends on what your current situation is, and it really comes down to talking to an accountant. What we're looking at is what can you do right now to assist you financially on this side of the year, and what you need to do to consider in the new year. So the first thing that we always look at is corporate structure. When you look at corporate structuring, oftentimes someone would have just created a company. It's a standard PTY Ltd company, and it might be a case where that company is in a fairly high risk area where people might issue legal proceedings against it for breach of contract. They might want their money back, things like that. If you're a technology company, you might just be a PTY Ltd company, but you're looking to take in capital or grow in the future. And this might be the right time to look to see whether you want to restructure. And when I say restructure, oftentimes you might have your intellectual property held in a holding company, and then you might have your trading company have a license to use that technology, or it might be looking to create a family trust now, or it might be converting from a sole trader to a company. And what's really important is to look at whether you should do that on this side of the year or next side of the year. And I highly recommend you talk to an accountant to have a look at your current accounting and determine whether to do it on this side of the year or next side of the year, because capital gains tax can apply if you wait too long to go ahead and actually do the restructuring. And it might be that you can do your restructuring right now based on your 2021-22 numbers rather than do it in July, and then you're based on your 2022-2023 numbers. So have a look at whether you should do a restructure, and if you do it, whether you should be doing it right now before June or before July, or whether you should be doing it on the other side. Now, this is the normal structure, and a lot of people have this kind of structure. I won't get into the inner workings of how it operates, but in essence, a family trust will give you potentially the benefit to be able to distribute some of your income or some of the profits from your business between you and your spouse or other family members, so that when the money or the profit is issued as dividends to the shareholders, it's not just going to you and then you having to pay your standard income tax on that, or standard tax on that, but instead you're able to distribute it to several different people, which might actually reduce the tax effect of the profits that you're receiving. Now, the holding company, that's generally used to hold your assets in. It doesn't trade. It doesn't have any contracts with anybody except for maybe some of your investors. And it holds all your intellectual property, your trading name, your trademark, your domains, your software, your assets. So if you're in construction, maybe your vehicles, maybe your machinery, and so on. And then that just holds the assets, and it's protective because it's one remote from who you're actually, or what you're actually using to enter into business with, and that's your trading entity. So then the next entity you have is your trading entity, and the trading entity is the one that enters into all the contracts with all your different customers. And then what you do is you license from your holding company down to your trading company the use of your machinery, the use of your equipment, the use of your software, the use of your brand, and so on. And then you have a license agreement between your holding company and your trading company. And with that license agreement, it means that the holding company still owns the assets. The assets are protected. They're not owned by the trading company. And if anything ever happened to the trading company, then you would be able to terminate your license agreement and claw back all those assets back into the holding company, protecting the actual value in your company in the event something ever happened and went wrong. Now, what is important is if you have a structure like this, or you're looking to do a structure like this, you have a license agreement, but you also make sure you register a PPSR. A PPSR is a Personal Property Security Register, and that's under the Personal Property Securities Act. And I normally explain to people, it's like when you buy a vehicle, you might get a financier to finance your vehicle. The vehicle's still in your name, you own it, but if you try to sell it, any purchaser is going to see that the financier has a charge against your car, and you will be prohibited from selling it because everybody can see that you actually don't have that asset outright. So what a PPSR does is that the holding company would enter into license agreement with the trading company. The holding company that would then register a charge against the trading company. And if the trading company was to be sued, or if the trading company was to go into liquidation, you would have a PPSR security being a security interest in favor of the holding company against the trading company, which means a liquidator would have to give back those assets to the holding company, or the holding company can go in and repossess those assets. And without that charge registered against the trading company, the liquidator might be able to turn a blind eye to it and use the liquidation powers to not have consideration to a related party transaction. But if you have a PPSR charge secured against the trading company, then you're a secured creditor, and the PPSA defeats the powers of the liquidator because it's a legislative act that grants a secured interest. So in short, having a look at your structure, it might be a good time to do it now, and you might save a lot in tax if you were to do a very quick restructure right now before next year. And normally that's in a situation where you have a lot of profit, you're about to make a huge windfall. That means you're going to have to sell your shares in your trading company to the holding company, or sell your shares to a family trust. And in that circumstance, there could be capital gains tax. And what you want to do is you might want to do that restructuring before the year so you can save in capital gains tax. Now, a couple other things is when you're looking at that restructure, you want to look at the different risks that you have. Is it a risky business? Is there a reason to have protection of your assets? Are you going to be hiring employees? Is there a possibility that those employees could bring a claim that could potentially bring down your company? Do you have sufficient income in the business, and so on? So these are just some of the questions that we generally consider when deciding whether to do a restructure. And I'm sure Pat, during the next seminar, will also recommend to look at doing that restructure now, potentially. But if you are going to do it, you got to move quickly because you only have 3 weeks to complete it. The next one is looking at the workplace policies. I'm not sure if everybody's seen recently, we have Elon Musk, who's come out and said that all the employees have to return back to work, and he doesn't care. He wants them back in the office, minimum 40 hours per week. Now, a lot of employers are starting to go either way. It's either one, we need the people in the office and we're wanting everybody to come back, or it's two, we're happy with our current situation. We're happy with the work from home, and we will let people work from home. Now, the problem is that if you've allowed people to work from home for the last 2 years, and now you're wanting to bring them back to work, you really need to see if you have workplace policies to do that transition, and whether you've done proper due diligence and proper procedural fairness. You can't just simply say to someone, we want you back in work on Monday, full time all over again. It has to be a reasonable direction. It has to be reasonably informed to people, and you have to go through a proper procedure to do it. So one of the things is looking at, if you're going to start with a new year, with a new financial year, new transitioning plan to bring people back into work, have a look at your policies. We find that there's a lot of unfair dismissal claims at this time of year. There's a lot of redundancies at this time of year, and there's a lot of hiring just into January and August, or sorry, July and August. So what you want to do is make sure you get all your policies in place for the redundancies, for the changing of the way that the employees are doing their works, or if you're planning on hiring or terminating, also getting your policies up to scratch. Now, one of the things, while we talk about those policies, is if you are a member of the Lawpath platform, you can type in employee handbook. An employee handbook pulls up all the different policies that Lawpath has on its platform, and you can tick which ones you want to make a handbook. And if you don't have an employee handbook, I highly recommend it. It basically covers everything from grievances to bullying and harassment, annual leave policy, smoking policy, social media policy, and so on, work health and safety legislation, and so on. So have a look at that. If you don't have one, highly recommend you look at it. Now, there's a couple things that we have right now in the federal budget that is coming into play, and it's worthwhile for you to have a look at, and you might be eligible for it. The first one is the technology investment boost, and basically that is if you spend money on digital expenses, then you are going to get a deduction. So one of those things would be, for instance, if you sign up to Lawpath, that will be a business expense associated with digitalizing your company, and therefore that will be so if you pay, for instance, $1,000 for signing up to Lawpath, the government will give you an additional 20% on top of that. So there is have a look at how it works, but it is a very, very good boost that can help you. And whether it's, does it come into effect? It has come into effect. So whether you take advantage on this side of the year or on next side of the year, I highly recommend you talk to your accountant. And if you don't have an accountant, you can also sign up to Lawpath with the legal advice plan plus accounting advice, and ask an accountant, do you take it up now, or do you take it up in the new financial year, or call your own accountant and ask which side of the year should we take advantage of this. You also have your training and skills boost, which is very similar. So anything that you're using to, or any expenditure that you're spending for training or skills, that's another grant that they have. So again, whether you use it on this side of the year or next side of the year, you're going to want to talk to somebody. So have a look at that. Now, what we always find is it's the end of the financial year, and you're either going to be chasing your debts or you're going to be holding off on your debts, potentially, depending on whether you're cash or accrual. But what's important is this is a time of year that a lot of debtors realize that they're actually insolvent. And this is when they're actually talking to their accountant and realizing that they cannot pay their debts when they come due, which means that it may be a situation where companies either go into liquidation or close down at around this time because they don't want the obligation to have to file their tax returns knowing that they're actually insolvent. And the problem is when you have a client in that situation, the one that is the biggest complainer, so the squeaky wheel, will get the oil. And if you are sitting back and you've heard one of your clients say, oh, I'll pay you in installments, oh, don't worry about it, I'll pay you next month, or I'm waiting for this client to come through, or this job is about to come through and I'll have a bunch of cash then. It probably means that they're telling every other debtor of theirs the exact same story, and you're just one of those in a whole lineup of people that are owed money. And if you aren't the one that actually put pressure on them now, you might not be getting anything. And for instance, if the company owes $100,000 and you're owed 20, if you put a lot of pressure on them to pay you now, then you could negotiate and maybe say, I'll accept 15,000 and get your 15,000. But if you wait until the company goes into liquidation, the company's then liquidated, the liquidator comes in, looks at how much assets there are, and then they divide those assets amongst the creditors. And so you end up having maybe, there might be $100,000 worth of creditors, you're splitting whatever money that's left in that company between all of them. So highly recommend at this time of year, chase your debts, find out whether these debtors are actually going to pay you, put pressure on them, get them to give a personal guarantee if it's a director, get them to sign off on a payment plan, issue a statutory demand, which is a demand for payment where they have to pay you in 21 days. Call a lawyer, chase your debts, because if you don't and they are more than 2 to 3 months old, your risk of being unpaid becomes much higher. But on that point, also have a look at why haven't you been paid? And this is a good opportunity to look back at the year and say, well, I have this much in bad debts, and I have this much of lost time, or I have this much of lost money. And the reason a lot of the times is because of your terms and conditions with your customers. So it might be that you didn't include that clause that says that you can charge an additional fee for this, or it might be you don't have a change of scope or change of specifications clause in your agreement. It might be that you don't have strong enough debt recovery clauses that you say that you will report them to a credit reporting agency, that they will be paying you default interest, they will be paying your legal costs, your debt recovery costs, and so on. So have a look at your terms. It's a good time to reflect. If you have had some pain points over the years, it's probably because your terms are either not covering everything, not that clear, or might not be fit for your business at all. So have a look at that and reflect on it, and talk to your accountant and try to discover why you have bad debts and what you actually need to do to improve upon it. The other thing is to do, so when we look at how do you actually manage your debts, the first one would be sending an email reminder, making a phone call, escalating with another reminder, but that second reminder having a different subject title, a different contents, and then escalating it straight to a lawyer. If you get in on this side of the year, you might be able to get paid on this side of the year. Collecting debt for a lawyer, we only give 7 days normally, and it moves very fast. You either know they are going to pay, and then you settle, or they're not, and then the lawyer decides how they're going to approach it. It's either going to be, if they've admitted the debt, we go straight in for immediate statutory demand, and they have to pay within 21 days, which is still on this side of the year. Now, looking at super and modern awards. So the modern awards increase normally on the 1st of July every year. Superannuation increases as well. So it's a couple of things that you want to look at is you're going to have to possibly work with your bookkeeper, work with your office manager, have a look at your Xero or MyOp accounting yourself. And you have to remember that you need to change the hourly rates or the salary or the pay rates of what you're actually putting into your system to deal with the brand new award rates that are coming in on the 1st of July. You also have to remember to adjust your super, because the super contributions are going up to 10.5. Now, this is an interesting point, whether you want to do it or not. If your employment contracts that you issue say that you are going to pay somebody X amount per year plus super, as an employer, you have to eat that increase in the super. But if you say that you're going to be paid X salary, including super, the employee technically needs to eat that increase in the super amount. So it'd be worthwhile to have a look at what your contract says. Is it plus super or including super? And then also consider whether you want to have to be liable for that extra 5% increase in the future, because it's going up to 12% for all future employees, or whether you want the employee to be responsible for that. And that's entirely an issue for you and something for you to consider, but it just comes down to how you draft your employment contract. So if you're looking for hiring, have another look at your employment contracts. There's some additional government benefits. These are more New South Wales state-based ones, but each state is having something similar coming out of COVID. So we have the small business fees and charges rebate. So that's where you spend certain expenditure. Normally it's primarily hospitality, but if you've spent anything on licensing fees or anything along those lines, this is basically a rebate for those license fees that you would have paid to the New South Wales government. Just a note on the Dine and Discover, use them because they're going to be expiring. And Safe Work Small Business Rebate, that is essentially, if you, on this side of the year, if you want to spend anything, you can get a rebate on that. if it relates to safety in your workspace. So if you want to get a trolley to roll heavy goods, if you want to buy some more ethanol, I'm thinking hand sanitizer, you can probably get that above the line. So there's a lot of different expenditures that you can spend right now in relation to work health and safety, and then you can get a rebate on that. And then there's the Small Business Digital Adaptation Program. That's what a lot of people are taking advantage of for buying a Lawpath subscription. So they're buying the Lawpath subscription, they're then getting a rebate back on the fees that they pay for that subscription. So have a look at that as well. Lawpath has a bunch of different articles on that, and we can give you a link on that so you learn how that works. Now, again, as I've mentioned a couple of times, it's looking at your past year, and it's also about planning ahead. And when you say looking at your past year, what you want to do is look at what your pay points are. You're going through your account and you're saying, how do I have $50,000 of profit on the books when there's nothing in my bank account? How do I have this much profit, but I still haven't paid my employees yet? That's something that's quite common for small business, where on paper, they end up getting stuck paying a lot of tax, but they actually don't know where the money's gone. And it might be that that money's gone to bad debts. It might be that it's gone somewhere else. And it's really important to make sure you figure out your financial stability moving forward in the future and how you can improve upon it. And the accountants help plan your future from a budget, from a accounting perspective, cash flow perspective, how to grow your business. And they're very, very important at this time of year to help you understand what happened in the past and how to grow in the future. The lawyers are the ones that normally help to fix it. And then that is getting your documents improved, figuring out what your pain points are. And so looking ahead, a lot of people are hiring, or a lot of people are making redundancies. If you're hiring, get your policy sorted. And the main reason is that there's a lot of unfair dismissals right now around people trying to get their staff into the office, given the many opportunities to come back. Some of the staff might have moved to interstate. Some of the staff are refusing to come back. And people have now finally had enough, and they're saying, well, we're terminating your employment, and then having an unfair dismissal claim. So Lawpath has, if you're a subscriber, sorry, they have a termination of employee workflow. On the legal advice plan, you can talk to lawyers such as myself on strategizing about what you need to do to get rid of a certain employee and how do you do that. And then also looking at, well, moving out in the future, what policies do I need to have to make sure that this is going to be smooth going forward. And this is just some of the things that we consider moving forward. So having your business plan, figuring out which policies you need, talking to your accountant, collecting your debts, and then also whether you're going to pay yourself a salary, director fee, or dividend. So a lot of the businesses, they will either pay themselves as a salaried employee, or they'll pay themselves a director fee, or they'll pay themselves a dividend. But if you don't make those payments on this side of the year, they're not going to be dealt with on this side of the year. So it's really important to figure out whether you're going to pay yourself on this side of the year or next side of the year. So I can't stress how important it is to figure out your financial position on this side of the year, because the minute the bank statements switch over to the new year, you can't do anything to change that. And you might have saved $5,000, $10,000, $20,000 if you have just done one transaction on this side of the year. Getting your records sorted. So I know one of the questions that we have is, do you need to send a report to your shareholders? If you're a privately held business, a lot of times your constitution will talk about that. And a lot of time your shareholders agreement will talk about that. So there's specific clauses within the shareholders agreement and the constitution. And normally there's a requirement for you to have an annual general meeting even if you're a private company, if your constitution says that. And it's at that time that you present normally your standard profit and loss and your balance sheet potentially, and just giving a general overflow. There's not always a requirement to actually give your financials to your shareholders, believe it or not. But what is important is you want to communicate with your shareholders. A lot of people that have invested, if they don't hear from you, they'll think there's a problem. And if you don't do anything about it and you don't tell them about that problem, they'll get more agitated, and then they can apply to get a copy of those books or book and records, as long as it's for a proper purpose. And that's under the Corporations Act. So what's important is, if you have had some problems this year, you better do it by making a report that explains it, explains the situation and why it hasn't done so well. If you've had a great year, this is a great opportunity to have that meeting with your shareholders as well. So a couple of things that you want to do as well as stock takes, get ready for your BAS, reconcile all your accounts, look at whether you want to buy any assets, whether we want to sell any assets or depreciate them, getting your tax returns together. But what we also do is, if you're looking to grow this year and you're looking to do a cap raise, there's a lot of investors that want to do a deal on this side of the year and not next side of the year. And it might be that they start in the due diligence process, and it might be that you don't have your share certificates, you don't have your share registry, you don't have your asset records updated. So this is another thing to do, is to look at, make sure you have all your records updated. And if you don't have it on this side of the year, maybe you do it on the next side of the year. But remember, when it comes time for you to grow, it's really important that all your records have been properly reflected over the years, because going back and making those documents, you're going to make mistakes. Or if you're looking at it, or if an investor's coming in and looking at your book and records and see that they're really disorganized, they might lose interest in your business. So if you've issued shares to anybody, make sure you have a subscription agreement, an application form, a consent to become a member. If you have directors, make sure they've consented to become a director. You should have a letter of appointment so that there's an opportunity to remove them. If you don't have a shareholders agreement, consider shareholders agreement is very, very important and almost essential from my view if you have more than one shareholder in your business. Having a look at whether you've sold shares, transferred shares, getting all that recorded as well, whether you have an employee share option plan, whether you want to create an employee share option plan on this side of the year as well. So these are all the things that we normally talk to our customers on the legal advice plan, where it's unlimited phone calls, up to 30 minutes. We answer all these questions, even that they're specific to you, and we give you guidance on what you need to do right now to get sorted on this side of the year. And then we have the legal advice and accounting advice, where I might have a call with you, and then you can book in a call right afterwards with James, and James can have a call with you on the exact same topic. And then you have the two things together, so you can go into the platform and actually do what you need to do on this side of the year. So that's about it for this seminar. I really was hoping to do more Q&A. Any kind of questions I'm open to that doesn't have to touch upon this presentation. In the past, we normally have 40, 50 questions, and so we end up spending a long time on questions. So that's why I've tried to keep this short so that we can more focus on what your requirements are. In terms of this offer, anyone that's in this webinar, there is the exclusive offer. Currently, the legal advice plan, which is get access to all the legal documents, get access to the electronic signing, and get access to unlimited lawyers on 30-minute phone calls on the legal advice plan. That's normally $1,440, but it's on sale for $936. So it's quite a huge savings if you were to sign up by commenting yes during this chat, and then Lawpath will contact you and you'll be getting that discount, or you can visit that link as well. Alternatively, right now also you have the legal advice and accounting plan, and that is unlimited phone calls with accountants as well. And so basically, as I mentioned, you can book in a call with me, you can book in a call with the accountant, you can put it together, go and create your own employee share option plan on this side of the year and have that launched, or take in shares or transfer your shareholding or whatever it is, all within the next 3 weeks. And so you can move quite quickly. The legal advice plan is also has a deal going right now, and it's $199 trial for 3 months. And if you're on the legal advice plan, then you can just upgrade. So it's not the $199 on top of what you're paying. It's just the difference between what you're currently paying on your legal advice plan, plus the additional amount for the next 3 months to trial the accounting plan. And so right now, if you have an accountant, they might be difficult to get a hold of. They might not be specialized in that field. And so what it does is it gets you an opportunity to get on a call with a lawyer or an accountant within the next 24 hours and answer your quick questions about your deductions, what you need to do on this side of the year. And then you can ask as many questions as you want for up to 30 minutes. And because it's in June, it's quite important to do that. So if you can't get a hold of your accountant, this is a no-brainer to do that. So let's have a look at the Q&A. So the first, and feel free to answer as many or ask as many questions as you want. So the first question we have, it's just jumping up, just 1 second. Not sure if I can see the top one. So would it be a good idea to pay some expenses up front to reduce your tax liability for the year? Look, I have clients that prepay all their subscriptions, all their different, everything that they can, they all prepay on this side of the year because it reduces. So if you have a profit and you want to reduce your tax, you load up your business with expenses on this side of the year, it reduces your profit. But the only thing is that it's really kind of just defers your tax because you'll then have to load up every June, unless 1 year you might have a loss. So if you have an unusual gain, I would definitely be loading up on your expenses on this side of the year. I'm not an accountant, I'm a business owner, and I'm a lawyer. So I'm not giving you accounting advice, but I definitely think it's a good idea to load up your expenses on this side of the year if you can and prepay as much as you can, if that's going to reduce your tax. But it doesn't actually give you a reduction in the tax because then you're going to have to do the same thing next year, ongoing until you actually have a loss. So what is the cost of the Lawpath employee handbook? So when you sign up to Lawpath, essentially the way it works is there's 2 different packages. One is the Essentials plan, and the Essentials plan is $300 and some dollars per annum, and it gives you access to over 335 legal documents. So you can log into the system, and then they've digitalized all these different contracts. So you can go in and make an employment contract, and it asks you a series of questions. What's your address? What's your business name? What's your employee's name? Do you want a non-solicitation clause? Yes. How long do you want that non-solicitation clause to be for? This is the recommended period. Do you want a restraint to trade clause? Yes. And it goes through a whole workflow in that legal document so that you can then press complete. And then you can press the button collaborate with your other team members to review it. And then you can press a button e-signature and you can send it off for signing. And so they've digitalized all the legal documents within there, and there's over 300. And so if you pay for the subscription, you get access to all those documents. And if you pay for the subscription that includes the legal advice plan, then you can make that contract. You can book in a call with a lawyer, and then that lawyer can review what the changes you've made, give you guidance on how to complete that document as well. Can Lawpath assist with inappropriate workplace policies, please? Yes. So if you go into the Lawpath platform, I always just say go to the employee handbook, because what it does there is it lists all the different policies that Lawpath has. And you can tick which ones you have, and then you can press next, and there's a whole bunch of other ones, and you tick which ones you want, and then you press OK, and it creates one big handbook. However, alternatively, each one of those policies are also a separate document in the platform itself. So you can just grab one of those documents and not the whole handbook if you already have a handbook, for instance. So when you're asking, can Lawpath help with your workplace policies? Absolutely. There's about 16 different ones. Many lawyers charge thousands of dollars for a handbook. So it's pretty great. It covers everything from injury in the workplace, annual leave policy, smoking policy, as I mentioned, work from home policy, and so on. So just have a look at that system. If you're on the legal advice plan, then you can book in a call with a lawyer, and that lawyer will then go through and talk to you about that. Somewhere else, I always recommend, if you're in Victoria, go to Safe Work, or if you're in New South Wales, those websites have a lot of templates as well for a safe work method statement. For instance, if you're in the construction industry, and they also have industry specific data as well. So if you want to get something along those lines, you can have a look at those government websites as well. Does Lawpath have resources for the accounting, stock take and profit and loss reporting, etc.? No. I believe Lawpath has a standard business plan, but Lawpath doesn't have that. I'm not sure exactly what kind of resources you were looking for in terms of stock take or profit and loss reporting. Normally, so Lawpath has MyOp as its partner, and if you sign up to Lawpath, you also get 6 months for free with MyOp, and then MyOp has a lot of that digitally built into it, where as long as you reconcile your accounts, you can just press, you can just download your profit and loss or your balance sheet. And so that's normally built into most accounting systems that most people have once they start their business. Do business structure agreements need to be signed on this side of the year? Well, I guess it depends on what kind of business structure agreements we're talking about. So if you're looking to issue shares to in your company for cash, the money has to land in your bank account on this side of the year. If it doesn't, then it's not going to be treated from an accounting perspective as a transaction that happened on this side of the year. So you would want to get a subscription agreement drawn up, and a subscription agreement is where you're selling shares in exchange for cash. And again, it's in the Lawpath platform. And that subscription agreement, you would want to say the completion date is the 30th of June or earlier, so that that cash actually lands in your account before this the new financial year. And then the other question is, in terms of business structure, I mentioned a shareholders agreement where you have 2 shareholders or more. You really want to get that agreement in place. If you don't have one, the only way to resolve a business dispute is the Supreme Court of your state, because it's the Corporations Act, and the Supreme Court has the primary jurisdiction for Corporation Act disputes. So if you end up getting in a dispute with your shareholder or your director or your business partner or whoever it is, and you don't have a shareholders agreement, really the only option is spending a lot of money on a lawyer and going to the Supreme Court. And companies can't normally represent themselves in the Supreme Court. And normally the filing fee is $2,000 or more. So you're spending normally $20,000 plus to resolve your dispute in the Supreme Court. And that's under Section 232 of the Corporations Act, which basically allows you to either buy one out, sell the shares, or sell the shares to the other, or wind up your company. But if you have a shareholders agreement, it's a contractual outline of what happens when there's a dispute. It says how the disputes are going to be resolved. It outlines what the obligations of the different parties are. It outlines what decisions can and cannot be made, who gets the right to appoint a director. But most importantly, it normally has a dispute resolution clause. And it says that if there's a dispute, then that dispute has to be resolved by mediation. And essentially, you have to lock yourself in a room for 8 hours with a third-party mediator trying to resolve the dispute amicably before you go down the road of having to spend money on lawyers into court. So you should get your shareholders agreement signed off as soon as you can if you haven't. You probably want to get it signed off on this side of the year, because if someone refuses to sign off on the tax returns on the next side of the year, because there's a dispute, well, you have the shareholders agreement signed off, which forces the directors to resolve their matters, and you can force them to work together to get the tax returns done. So that might be some reason to get it signed off on this side of the year. What is the accounting plan deal? The accounting plan deals, it actually includes something else that I didn't mention, which is really quite valuable. And it's basically what they call the company secretary, or the asset compliance plan. So in the accounting plan, you get the access to the ESS, which is all the legal documents that are automated, the electronic signing, the electronic collaboration with other people. And so you can create all those documents. You then get unlimited phone calls with lawyers for up to 30 minutes on any new legal issue for the year. And that's talking to a lawyer to review the contracts that you just made in the platform, to talk to them about an issue you might have, to review a document. The review doesn't include drafting anything for you, but it is a review, and we can tell you, well, you got to insert this clause, go to that contract, find that clause, cut and paste that, put that in there, and so on. And we give you guidance on how to do that. Or if it's employment law, as I mentioned, we can help strategize on how to terminate somebody or make someone redundant. And then the accounting plan is similar. It's unlimited phone calls with an accountant for up to 30 minutes on any new legal issue. So essentially, you can call an accountant and say, look, I know I can have some deductions on this side of the year. Tell me what those deductions are. And then you can call it back and say, okay, do I want to be using this grant on this side of the year, or do I want to be using it on that side of the year? My zero account shows that I have a profit of this much money, but I have these expenses coming in. And then, so that's essentially what the accounting plan is. And then you have the asset compliance, which is if you're planning on changing offices, changing directors, changing shareholders, increasing shares, splitting shares, doing anything along those lines where you have to log into ASIC and do those changes. The accounting plan includes the asset compliance plan, where Lawpath becomes your ASIC agent and processes all the ASIC changes on your behalf during the year as well. So the next question is, do I have an obligation of issuing end of financial year summary to major shareholders? And if not, if they're not an active part of the business? Generally, again, you got to have a look at your constitution. You have to have a look at your shareholders agreement. They are allowed to, under the Corporations Act, to get access to these for a proper purpose. But whether you have an agreement in place that you have to provide it to them, possibly not. If they're a reporting entity, like a self-managed super fund, you're going to have to, because they need to know the shares for reporting purposes. In terms of how does someone register an PPSR, so a PPSR is a secured charge against an entity. First of all, you have to have a charging clause in a contract. There has to be a written agreement. So you have to have a clause that grants a security interest against that entity. You normally have to register it within 21 days of you entering into that agreement. And you can go to, I think it's www.ppsr.org. I'll get someone from Lawpath to send you the link. It's a government website where you just follow the links, follow the steps, and you can register pursuant to that. But you do need a written agreement to grant that charge. Do business structures. I have clients going into land development, and I'm concerned about the best structure for this. A lot of people buy property doing it wrongly. And if they just got some very simple accounting and legal advice beforehand, they would save thousands and thousands and thousands of dollars. First of all, a lot of people will go and transfer their matrimonial home into their family trust. The minute they do that, now it's no longer a residential home. Now there's capital gains tax. Some people go and transfer their home into a self-managed super fund. Now you're going to have possible issues doing refurbishment of that property. Some people put a property into a company when they really should have done it within a unit trust, because the capital gains tax is distributed between the unit holders. And so I definitely suggest that they probably more talk to an accountant as opposed to a lawyer. And normally it's a unit trust structure for that development. It would be great to see document for disabilities such as workplace safety. So documents in terms of disabilities and workplace safety and section. Lawpath has a fair amount of documents on that. So they have occupational health and safety. They do also have an NDIS general suite. So if anyone is in the NDIS space, there are a suite of documents specifically for those, and that's all about disability. So possibly have a look at the NDIS documents, and within there, it might have some disability documents that you're looking for. Have a look at that, and we'll put a link in this about the NDIS packages that we have. Do we have any good examples of sweat equity vesting schedules? No, we don't have any examples of that. I can send an example if you would like. The problem with a lot of the examples are they can become extremely complex. I'm doing a $40 million one right now where we have safe notes converting, we have convertible notes converting, we have employee options that are unvested, we have vested ones, we have shareholders coming in, we have founders, shareholders, we have vesting. So sometimes vesting schedules just overcomplicate it. You might be able to reach out to Lawpath and see if they have one. I don't as a lawyer, because we generally stay away from actually doing the vesting schedules, but most accountants will. Do pro formas or pro formas help co-founders evaluate KPIs and sunset clauses? So generally speaking, in terms of setting KPIs and sunset clauses, that's normally in relation to vesting schedules. And sorry, I can't remember maybe I was thinking more of cap tables rather than vesting schedules. There is a vesting schedule in the co-founder or in the vesting agreement, I believe it's called in Lawpath. Also, if you look at the shareholders agreement, they have a clause between clause 12 and clause 14, which are standard founder vesting conditions. So it has good leaver clauses, bad leaver clauses. And normally the vesting schedule is someone works for a period of 48 months. So 4 years, their shares slowly vest 1 divided by 48. So each month they slowly earn it. If they're a good leaver, and they leave the business before those 48 months have expired, they keep the shares that they've earned and they lose the shares that they haven't earned. And then if they're a bad leaver, they lose the shares they haven't earned and they have to sell back the shares that they have earned at a significant discount. So you can just have a look at the Lawpath shareholder agreement under the founder vesting conditions. And that's the standard that most people have. Are there any templates that assist for capturing financial contributions and negotiations that capture effort in finances? So this is kind of splitting it up. So a lot of times you'll be issuing shares to possibly an employee or someone, or maybe just a co-founder. And that co-founder is issued shares because they're going to work in your business. The problem is if you just record with ASIC that they have just got shares in the business, you can't take them away. That's it. They now have them. And you might have said that they get 50% of the business for 50 cents. there's no way to claw those back. You might have some kind of verbal arrangement that they're supposed to work in the business, but what happens if they don't? What happens if they get hit by a bus tomorrow? So normally we put those shares on, there's two kinds of vesting. One is reverse vesting, where you actually issue them the shares and then they have to earn them. And if they don't, you can claw some of them back. Or the other way is by an option agreement, where you give them an option where one option equals one share to convert an option into a share once they've satisfied certain conditions. And that can be time-based or performance-based and so on. And then the other way is an employee share option plan. And the general benefits of an employee share option plan is that employees who are issued options that then convert into shares under that plan, they end up getting a 50% capital gains concession at the time of an exit event. In terms of a joint venture, I'm not sure, because joint ventures are very complex. They can either be registered one, unregistered. They can be by way of opening up a company together and each going in 50-50 shareholder. They could just have an ABN together. So I'm not sure exactly what this template would look like, but there is a joint venture agreement in Lawpath. But if you're creating a joint venture agreement where two companies are creating a new company, you're probably better off just going down with a shareholders agreement to deal with that. And any other?
Just last one.
Yeah, so that was, I was always talking about in terms of land development. Normally it's a unit trust. That's the general structure that an accountant recommends. Yeah, that's about it.
That's about it.
All right, well, thanks very much. And if you enjoyed this, like the YouTube page, share it around. But I'll let you do a little bit of a push for the offer again.
All good. Thank you so much, Damin. And yes, as you guys saw, if you did attend today's webinar, you guys can get 35% off our legal advice plan. And if you haven't said yes in the chat, go for it now. And then one of our consultants can contact you guys. Thank you so much for attending. The webinar and the slides will be made available, so we'll send it across to you guys, or you can access it via YouTube. We do have more webinars coming up, so just have a look on our social media pages where we provide regular updates. Thank you so much. I hope everyone has a wonderful afternoon.
And like the YouTube page, because if every webinar gets uploaded to that same page.
Yes, exactly. So if you've missed today's webinar, or if there's another webinar that catches your interest, I'm pretty sure Lawpath has already covered it. So it will